First things first, as always, is the dollar. Let's see what the dollar's doing. So I have spoken a lot about my bullish bias with the DXY. We've been seeing lower lows and lower highs for quite some time. We broke out of this descending channel, and that pretty much has set my bias, set my tone for the dollar going into the foreseeable future. So since we had that breakout last week, I have been pretty bullish. The only thing is we're lacking momentum. We did see that original breakout after CPI last Tuesday. Then since then, momentum became very flat. We had some other news regarding the dollar as well, gave us some nice wicks to the upside and to the downside. But since then, the market has been incredibly flat. Now, I am still bullish. There is a very key level of support, which price is now trading above. We have this area here, which I've been keeping a note on, because this was a very key level of resistance recently as price was coming into this area. And again, I was 50-50. Price could have respected this area and we could be looking for sells, or price could break through this area and perhaps we're looking for buys. And of course, that's the situation that we're in right now. So price has cleared that level of resistance and of course cleared that channel, and that's made me bullish. Now at the moment, we're just kind of moving sideways. So we're quite flat. So the plan is just looking for some more momentum to confirm that bullish bias, that we have kind of reversed this bearish trend, and then we can look for pullbacks and buying opportunities off the back of that. I'm just kind of waiting for a bit more momentum to enter the market before I start looking for opportunities. But in terms of the confluence, in terms of the market structure, it is definitely leaning to the bullish side of things. If the market was going to continue lower, most likely would have respected this area here as resistance. Most likely would have respected that trend line there as well, the upper level of the channel, and probably fell over from that area. The fact that we have broken through and so far respecting this area as support is again a bullish signal, a bullish sign. Not necessarily that we're guaranteed to see more upside, but at least we can favor that as a buyer. So I'm looking for buying opportunities for the dollar as long as we can stay above this area, which is 97. Actually, we'll call it 98. As long as we can stay above 98, that is a bullish bias for me. I'll be looking at more upside, pullbacks, and more upside beyond that as well. We've got some key highs to take note of: 99.5, 100.5, and you got the level up here, 101. We'll call it 102 actually, just shy of 102. So those are the areas which I'll look at for profit taking and just see how the dollar operates at. But in terms of the bias, it is bullish for now. Like I said, as long as we stay above that 98 area, which has, we've got the trend line confluence and the breakout confluence, I'm pretty bullish. I have to admit the price action is quite flat on the 4-hour chart, but it might just be a bit of a sideways movement before we do get that breakout, and then hopefully some opportunities off the back of that. But that is the plan at the moment for the dollar, as long as we don't break underneath, of course. EURUSD is a bit more tricky. Of course, if the dollar is going to see a move like that, then of course I would be pretty bearish on EURUSD. If the dollar is going to fly, then I'm not going to look to buy EURUSD, because a strong dollar is going to mean EURUSD is likely to fall. But in terms of the confluences, they're not quite there yet for euro. This is a similar level on the euro, which price is actually respecting as support at the moment. I pointed this out on the weekly analysis. If you haven't checked it out, make sure you go do so. I posted it on Saturday. But we have a very solid level of resistance here on the daily chart. At the resistance there again, you can see price has broken through that, and at the moment using it as support. So that's not necessarily giving us a bearish bias there for euro. The only thing that has really gave me the bearish bias in terms of the pure technical analysis on EURUSD is the breakout of this ascending channel here. Price was in that channel for quite some time. We did break out, of course, alongside the DXY as well after CPI. But we haven't cleared support here, so that's probably explains why we have been a bit sideways and haven't really seen much momentum, because price is kind of stuck at support right now. We do have this counter trend line, which so far is keeping us pretty bearish, but not really giving us a high quality opportunity. I said in the weekly analysis, if price can break to the downside, break through this area, and then come back for a pullback, now that would be something I would be very inclined to trade, because at that point, A break like that's really confirmed to me, okay, the bears are well and truly at play right now. Probably going to break structure to our left over here. We're back below key levels of support, which is going to turn into resistance. And I'll be happy to look for a pullback and some shorts. And probably at that point as well, you probably see the DXY, fly to the upside as well. And the dollar's giving you some nice bullish structure to trade. So that would be a high quality opportunity. That would be more of a conservative trade in terms of waiting for the market to completely shift, really give you that confirmed breakout, that confirmed reversal, so to speak, and then look for your pullbacks. That would be the better opportunity to get into some shorts. There might be some shorts at that trend line now for a push down. Like I said, bit more aggressive. Price still at support, not optimal. Something like this, then a pullback would be a lot more optimal. Of course, you have to be patient for that. And it may never occur as well. Maybe Euro is going to be bullish. Maybe we do break through that and do rise. After all, we are respecting support. So that is definitely a possibility. But like I said, I'm not really so concerned with the bias for Euro, as I'm not really concerned with the sells for the dollar. So that's really what I'm looking at, but we're still quite a bit away from that. So we'll be patient. Pound USD, on the other hand, I quite like the shorts. This one hasn't really broken through support through here yet. So that would be, again, that would be very nice to see if price can clear this low, because this is, of course, our last low, which gave us the last high. So that technically is our, if price was to break that, that would technically be a break of structure. This bullish trend would be at an end, and I'll be looking at more downside. But again, preferably I would like price to break the low, but we don't necessarily have to. It'd still give us a nice head and shoulder opportunity. So that would be the left, that would be the head, that would be the right shoulder, and of course that would be the neckline. So the pattern is still very much at play, but I always prefer when we do break structure, because that kind of gives me the confidence to say that, okay, this bullish trend has well and truly ended, so the shorts are obviously going to be of a higher probability. Whereas if you do respect the low, it's a slightly lower probability trade. Still a good trade nonetheless, but slightly lower probability. We have to take that into consideration. But I still like the shorts here for pound USD. I'm looking at this area here. Brief supply, nice push to the downside. I think that would be a smart place for a short. Also kind of lines up with resistance to our left over there. You've got highs over there. If you come back, smash into that level, reject it well, I think that would be a healthy place to short around the 1.355, 1.36 area. And then we can target these lows and potentially some areas further down as well. So I quite like what I'm seeing with pound USD. Sort of same situation with Euro in terms of we've broken out of this ascending channel, and now we're looking for the lower high for some more downside. So pretty bearish on pound, waiting for a pullback at the moment, kind of just respecting support right now. There might be some buys at play, but I'm not interested because I would expect the bigger move to be to the downside. So as a swing trader, that's really where I want to position myself, especially a trend that's been going on for a while, starting to break through trend lines. We've taken out some major highs. It's a market that's starting to fatigue as well, seeing some bigger bearish moves. Yeah, it's not really a trend which I want to keep following unless I see some more life come into it, which at the moment isn't quite there. So shorts is definitely where I want to be paying attention to. So that's the plan there for pound USD. In terms of dollar CAD, keeping a close eye on dollar CAD. It's been a very corrective move up. So despite the reaction we had at the lows, there hasn't been anything of significance. If I go to the daily chart, we've got some prior support to our left here, which has been flipped and is acting as resistance. So this is actually quite a key area here for dollar CAD. If I go to the weekly chart, you can see prices basically come back into this area of demand. We spent a few weeks here before we had a crazy move to the upside. Prices tapped into that and we're seeing a bit of a reaction. So is this potentially a reversal for dollar CAD? Or is this price just having a pullback to continue and keep falling? I wouldn't say we know the answer yet to that question, but we can keep an eye on that because I think both are opportunities worthwhile trading. If this is potentially price forming a bottom at this area of demand and we are going to push to the upside, then what I do want to see is, if we drop to the 4-hour chart, what I do want to see is a break of structure, a price to clear out this high to our left here. So price can break through that. That'll tell me that, okay, the market is going bullish. We can look for some pullbacks, higher low, maybe a retest of that area. And that would be a smart place for a buy. And maybe start to target some highs there at 1.396. If price is just going to sell off, and this is just a very kind of corrective grind higher, and price is just going to give us a sell, then we're looking for rejection here, perhaps double top, or maybe even a break of this trend line to enter some shorts for a push back into the low here. So I can see price go through both scenarios really. It just really depends what the DXY is going to do. I think if the DXY is going to be bullish and we are going to see a lot more upside, then of course dollar CAD probably does break to the upside and we'll look for some pullback opportunities. So as I said, a break of structure, a pullback, and some buyers following. If the market is going to be bearish, if the DXY is going to be bearish and continue the trend we've seen for the past few months, then we're likely to respect this area and turn down. So when you are looking to trade dollar pairs, always keep an eye what the DXY is doing. Of course, DXY is always a good confluence. You want to make sure that the opportunity you're trading on whatever USD pair you're trading is of good quality. Don't necessarily completely rely on the dollar, because sometimes other currencies can have a big say. CAD, Aussie, Euro, depending what they're doing, you have to watch out. So DXY is always a good metric, always a good confluence, but make sure the opportunity makes sense as well. But yeah, that's what I'm going to keep an eye for dollar CAD, really what we do at this area. In terms of Aussie dollar, keeping an eye on this one. Not the biggest fan. I just see this as a very choppy market that's just been slowly grinding and ascending higher. I'm waiting for us to break out of this mess really. I do anticipate us to break lower here, but we're taking our sweet time. I did say I was looking for shorts up at the high of the channel. Price never got there. We're looking pretty bullish. I think that was not last week, the week before. I was kind of hoping for us to continue a little bit higher, test the upper end of the channel, then have the drop, but nope. Price was not bullish enough to see that. It just came back into resistance and fell over. I mean, it hasn't yet broke through the channel, so maybe there is still a world where we do something like that. But I've got a feeling that price might just kind of consolidate a little bit and then eventually fall. I'm pretty bearish in Aussie dollar. Long term, however, I'm actually pretty bullish. I do think we will fall just to put a higher low in and continue high. That's still very much my longer term outlook for Aussie dollar, but that could be a few weeks to potentially a few months into the future. So we're not going to speak too much upon that. As that progresses, we can get into a bit more detail as to why I expect that to happen. But for now, at least, very corrective ascending channel, not showing much healthy momentum to the upside. We're likely probably to spill over here to the downside. And at least I expect price to push back to this area, which is 0.635. So yeah, pretty bearish in Aussie. In terms of actually trading, that's the difficult part. I don't really see anywhere to get some smart entries. Yeah, that's really difficult, which is why I've been waiting for price to push to the up end of the channel, because I can look for rejection up there, get a relatively safe stop loss above the highs, and then hopefully take advantage of that swing down. Trying to enter shorts in this area. You got the low of the trend line, you got support right next to you. It's just a recipe for a little bit of a chaos. And you can see we've had multiple fake outs as well, arguably over there as well. So it's just not really the best market to short in these conditions. So personally, unless we do get a big move back to the upper end, I would stay away. New Zealand dollar, kind of same situation as well. We've got a ascending channel here as well. Connect the highs and lows up. You can see price has been chugging away to the upside for a while as well. Maybe not as aggressively as Aussie dollar, but same sort of price action. I expect the same sort of pattern to form as well. The big push down, higher low, and then a reversal. But for now, I do expect us to eventually break to the downside again. When price is ascending like this, I'm always getting ready for a breakdown. That's the pattern at play. Again, as a technical trader, all you're looking at is historical patterns repeating themselves. Nothing more to it than that. When price is typically in an ascending channel, most of the time we do break lower. So I'm expecting price to break low. We might see another swing to the upside. That could happen. And I think if that does happen, that might provide some nice shorting opportunities to take it back down again. I'm not so interested in the buys because, again, I do have that bearish bias. I'm only looking to sell it. There might be a bounce here, but I'd rather just stick with the shorts because that's where I expect the bigger move to be. There might be something if we break out and a retest somewhere. Maybe if you drop to the 4 hours, see a little bit better. Probably not. But maybe if we can clear support and something like this could come around, that could be something interesting. It really depends on the breakout and the pullback if it actually does turn into a quality opportunity, but we're a long way away from that as well. So there might be some short-term buys, especially scalps. If you're looking for a quick trade to hold for a few candles and then get out quickly, you might find that there. We did see that last week. Price came in, respected it pretty well. A few wicks to the downside, then we did see a few candles to the upside. So if you're looking for those kind of quick moves there, one-to-one risk-reward ratios, you can get away with that because we are coming back to some healthy areas, provided there's some healthy rejection. But I just wouldn't look for a big swing trade. That's the only advice I would give from this area, because I do expect us to soon enough break lower. So again, not much of a shorting opportunity unless we push back to highs there for New Zealand dollar. In terms of gold, I'm still very bullish on gold, looking for this to eventually break to the upside, but we're taking our sweet time with this one as well. And we're very flat here, so I haven't been a big fan of the lower time frames for gold. I've spoken about a couple levels which I do like the look of for a buy, this being one of them, 32.60 we can call it, and also 31.40. Both areas I quite like the look of it because we're away from the noise. That's a big reason why I like those two levels. You know, this is where I see all the noise at. So really, I don't want to get involved in those areas because it's very speculative, very indecisive price action, and don't really have suitable areas to put a good stop loss. If I can get a stop loss underneath here or underneath here, I'm just in a much better place. Not that it's a perfect place and I won't get stopped out. I could always get stopped out wherever I put my stop loss, but at least here, the market has to work a lot harder to take my stop if it wants to. And if it does, it's always a smart place to get back in there and put your stop loss below the fake out or below the wick. And you'll be more protected there. So I like these areas to get long. It's effectively a ranging market, so I always want to buy low and sell high anyway. And those two levels make sense. And of course, taking into consideration the humongous uptrend gold is still in, I'm obviously still wanting to be a buyer. So if I can just find appropriate places to buy, it makes so much sense. And then targets, back to highs. You got a lot of resistance there. I would expect price to eventually break out. But if you can at least get a trade into that level, you're looking pretty good. So that's still very much the plan with gold. And lastly, silver, still very bullish with this one. Might have missed the opportunity. There was a nice lower time frame pullback there, perhaps like on the 50-minute chart, which looks like price is seeing the continuation of. I was talking a lot about this level at 37.2 last week. Unfortunately, just kind of missed that opportunity. I still like the buys for silver, so if price was to revert, come back and test that area, I think that still be a smart place for a buy. So I'm still very much going to keep a close eye on that level. But targets for silver, push back to the high and a push back to 40 as well. So I'm expecting a lot more upside for silver in the next few days, few weeks here. It's just about finding those pullbacks really and riding the momentum to the upside. So very bullish on silver.